Hi, I'm Jeremy Jawish. I'm the CEO and the founder of Ship Technology. Ship provides insurers an artificial intelligence platform to help them take better, faster, more accurate decisions through the life cycle of their customer journey.
So you've laid it out very nicely there, that AI is a powerful tool for automation in businesses. What I think is really useful for our viewers is maybe to give us some examples of where AI has been used in the claims fraud process to really drive those efficiencies, those financial efficiencies that you were talking about.
So yeah, it's there's a lot of talks and examples of AI impacting the combined ratio, but I think what's exciting on our side, we're able to give real numbers of what's the impact. And today, on average, we're seeing per decision, what is the decision? Would be claims coverage, right? Is it covered? That's one decision. Is there a subrogation opportunity? That's the second decision. Is it suspicious? The third decision. So we're seeing per decision an impact from 0.5 to 2% of combined ratio. So maybe 0.5 sounds small, but if you add 0.5 plus 0.5 plus 0.5, you're able to impact 2 to 6, 7% of combined ratio improvements by automating the right decisions, taking the right decisions with AI. And so in a world where today combined ratio is sometimes out of control, being able with AI without really changing your processes, not just cutting costs and removing people, but being able to put the right people at the right moment within the claim process, you're able to improve your combined ratio by 7-8%. And that's a substantial number. And when you think about it, improving your combined ratio by 8% by driving efficiency and removing handling costs, you can see that how much you need to be, driving efficiency and cutting costs to get to 8% of combined ratio with removing headcounts, compared to making sure that you're able to drive the right decisions to the right people in real time by improving 8%. And this is where it becomes a no-brainer, because there's so much you can automate and be efficient on and reduce claim handling costs, while you're able to do it by driving the right decision process. And when you take a step back and you look at the process, it's much more beneficial for your customer to make sure you're taking the right decision in real time automatically and steering them to the right person to help them, rather than just try to say yes or no, and then sometimes having customers that are questioning decisions like, I'm not understanding why did I receive that, instead of being able to either be very sure of the decision and having AI explaining it, or if you can't, send it to an expert to help your customer within the process.
So you talk about the 8% efficiency saving that you can make in your combined operating ratio as well. And I think you've spoken a lot about claims, but AI has lots more uses as well. And I think it's important if you could lay out perhaps how you get to that 8% and what savings can be made in which different areas for companies via the use of AI.
Today, when you look at the customer journey, there is lots of decisions that an insurer needs to take regarding the underwriting process. Is it a risk I want to take? At the claims process, do I want to pay for the claim? Like, is it covered? Am my customer responsible? How much I should pay? Should I pay it? Every decision is driving impact on the combined ratio. And what we estimated is that every single decision there has 0.5 to 2% of impact on combined ratio. Taking the right risk at the underwriting level is affecting combined ratio by 2 points. Consider if the claim is covered or not successfully, has a up to 2% impact on the combined ratio. Consider the claim suspicious or not, in the right manner, has a 2% impact on combined ratio. Taking the right subrogation decision, should I subrogate the claim or not, is having a 2%. Making sure that your invoicing quote is consistent with circumstances, having 2%. So if you stack these up, we're getting to 8 to 10% of impact on combined ratio that you can have while automating the decisions in the right way with the right AI. And so there's no magic solution, to improve by 10% the combined ratio, but there is, a solution that consists in stacking these decisions with AI and making sure that at every step you're taking the right decision. And I think insurers are realizing that instead of trying to automate as much as possible and ignoring the right decision at the right time, they started losing control over the combined ratio. And there's a big push to go back to how can I make sure I'm automating the decision the right way and making sure that I'm taking faster, more accurate decision at every step of my customer journey.
Great, and you've had an interesting journey into AI in the insurance sector as well. And I wondered, just from a personal perspective, whether you could maybe tell me what you think the most valuable part of AI is and the biggest impact it can have on a combined operating ratio in a company.
So yeah, what's really exciting about our journey is that when you look back and when we started Shift, a lot of insurers were reluctant to adopt AI. Is it the right solution for insurance? Would it be able to understand, our processes? And then when you look at the evolution in the last, 10 years, we're seeing that now AI is not anymore nice to have, it's a must have in the insurance sector. And what's super exciting also is that on the other hand, technically, you can see that AI is able to understand more and more insurance. Insurance processes are really complex, and this is why you don't have, thousands and thousands of insurance companies, because it's something that, has a lot of complexity, a lot of regulation. And what's super exciting is that today we're able to understand more and more the processes. The AI is able to reproduce a lot what experts want to do when they look at the claim. And also the other exciting part of it is that we're able to make sure that AI is compliant with all the regulation, and we're able to control the AI by removing all of the bias that could emerge while just taking decisions with automating decisions. And this is a super exciting part, is that it could have been a world where AI was not good enough for insurers, or you could imagine that there was a world where AI would not be able to be adopted by insurers, and having one new insurers pop them up and taking the whole market because they use AI, and having all the incumbents and big companies behind. And what's super exciting is that the whole market is embracing it, and that's something that we really bet on when we started the company. And we're very bullish on the fact that now it's becoming a must-have rather than a nice-to-have.